Hello, my name is Randy Williams. We are bringing you Keiretsu Forum Presents. We have Rob Neville, CEO of Savara today. We're talking about creative exit strategies. We have been taping this show for the last 14 months in Silicon Valley, bringing content-rich opportunities focused primarily in the startup ecosystem. But as our companies grow, they need an exit. Very proud to say over 100 Keiretsu Forum members have invested with Rob, including myself. So we're going to be talking about the creative strategy he is engaged to possibly, not possibly, it's going to be happening next couple of weeks to move to an exit strategy with Savara. Rob, welcome. Tell us what Savara does and past, present, and future, and where are we heading toward exit?
Thanks, Randy. It's a pleasure to be here, and do appreciate Keiretsu and all the support you've given us as a company over the many years that we've been, working with you and working with your members. So Savara is a rare respiratory disease company. So we have drugs, therapeutics that you inhale for rare lung diseases. I won't go into detail on the products, but we have two main programs. Arivanc is for cystic fibrosis patients, and now a new program that we acquired recently, and that is called Molgradex, and that's for patients with a disease called PAP, pulmonary alveolar proteinosis. It's a huge mouthful, but two diseases that are rare lung diseases, and we hope to build a company that focuses on such diseases.
Great. So let's start 30,000 feet. You came to us, I think, 5 years ago. The valuation then was a little under 12 million. You are creating an exit over 140 million?
Well, it's difficult to put math on what the value is because it's going to be determined by the market, right? So what we're doing is it's a reverse takeover. As an existing public company, and Savara will be reverse merging into that company and then being the surviving entity. So the actual value would be determined by the stock price in the market at the time of the takeover.
So listeners, viewers, every year there is a window open. Sometimes it's the public markets, maybe strategics, maybe there's so many ways to exit. How did you choose this profile or this journey to exit? And I hear that you're using Oslo, is that correct?
Oslo? No. It's a New York Stock Exchange.
Okay.
So the company is Mast Therapeutics. Mast had a failed program. They had a phase 3 study with a drug called Vapaloxima for sickle cell disease, and they failed that study. But they had a very interesting second asset. It's an inhaled product that we were interested in. And so not only do we get to be publicly listed by basically acquiring Mast and then being the surviving entity, but we also get this product that's an inhaled product that fits well with our current pipeline of products. So it's both positive for our shareholders because they get liquidity. They can sell their stock on the open market after a lockup. So that's the one value. But the other value is that we get access to this program that we think is interesting.
And how did you find them, or did they find you?
The way the reverse mergers work is usually a banker represents the company after they've failed, and yet they're still publicly listed, but their primary asset is no longer valid, and they run a process. And so the companies that are interested in being involved in the process will contact the bank that's representing the company, and then you go through a process. You present to ultimately their board and their investors, and eventually, if you're lucky, you end up being selected as the company that will merge into this public entity.
So Rob, we as investors, we care about exit, but we also love social bottom line investing, as my wife and I do. Obviously, you're solving a wonderful issue and problem throughout the globe. But you chose this particular path. Tell us other paths you explored, and maybe markets were closed to those particular paths. So let's talk about 2 or 3 creative strategies before you chose this reverse merger.
Well, so the typical approaches for startups that are private, the one would be that they get acquired. That's outside of your control. If any of your portfolio companies say we will be acquired by this date, that's just hopeful because you can't control who buys you. In fact, you can't run a company hoping to exit based on being bought because it's just outside of your control. So that's the one typical approach. That if that happens, it's great, but you have no control over it. The other one is IPO, and that would be a traditional public offering. And even there, like you said earlier, the windows of availability for an IPO open and close. And in the biotech world last year, the number of IPOs, or at least in the beginning of the year, was very limited.
And we're filming this in the spring of 2017, so we're talking about 2016.
Correct.
That window was?
The 2016 IPO market for biotech was somewhat limited. So that's IPO is an alternative option to liquidity for shareholders. And then the third option is a reverse takeover, which is the approach we've taken, where rather than going through a typical IPO process, you effectively merge with a public company, and then we end up being the surviving entity.
So as an investor, I have great empathy of obviously executing on the business model, which you've done, great empathy on trying to explore the exits, which you've done. And so as an investor, so this is going to happen the next 2 or 3 weeks, so give us a date.
So it's subject to our and the current public company, Mast Therapeutics. It's subject to their own shareholder consent and our own shareholder consent. So once those two in, so they have a shareholder meeting on April the 21st, 2017. And at that time, their shareholders will vote to approve or not approve the merger. Meantime, our shareholders, Savara's, including you, will get a DocuSign consent asking for you to approve the merger. And if everybody's in agreement, then the closing will happen shortly after April the 21st.
Okay, so let's fast forward. No promises, of course, for any shareholders. And we as investors, we care deeply that you're executing on your business plan, which you have, and then now you're preparing to hopefully be a public company, which you are going to be CEO. And so what type of, and again, I'm not putting you on the spot here, but again, we came in as investors early. And so if it's exiting over 100 million, it can be screwed as anywhere from 2 to 8x. So that's depending on liquidation. So tell us what type of return. You're probably not going to, you're not probably going to answer this, but I'm trying to put you on the spot here. Give us a lens into what type of return an investor will receive if she or he invested under 10 million, depending on when they exit, of course.
There's too many factors for me to give you an actual number, right? First of all, you can't determine pre-money. You just said your valuation was 10 million at the time we came in. Pre-money is irrelevant. You cannot take pre-money and figure out what the exit is going to be based on pre-money. So your math is not correct. It's based on the share price at the time. Because I'll give you an example. If we're 10 million pre and we raised 100 million, our post is 110. If we exited 100, then that's not a return, right? So you got to. So it depends on when you invested, and we have investors going back to 2008. They will obviously get a higher return than the investors in Keiretsu that came in 2012, and then other investors came in 2015 in our Series C. So that's the first thing: is when did you come in? What was the share price at the time, and then what will the share price be when we close? Okay, now we don't know the share price when we close because that's going to be market determined.
Absolutely, and so yes, depending on when you come in, opportunity is when you determine obviously your return, and also if you exit. I'm not that intrigued about exit. I want to go along for the ride. I believe in you, Rob, and I think you have a lot of great things ahead as a public company. But it's exciting, and I think America needs to know about angels, because angels helped you in many ways with not only resources but obviously capital when there wasn't liquidity in the marketplace, and you attracted, and not too many companies have done this in America. I think you raised what, over 35, close to 40 million?
44 million from angels.
Isn't that amazing?
That's incredible.
How many chapters of Keiretsu Forum participated?
I think 15 chapters. So about over 100 Keiretsu members are invest in Savara. We have 382 different investors, which is a lot for a private company. And I'm very grateful, as I said. In fact, we started raising money, and so it's not just individuals. Many of our investors are small family offices, boutique investment funds. They're not just individuals. Keiretsu would be an anomaly, but many of the others are a slightly different profile. But we raised the first round of angels in 2008, and that was a tough year to raise money right after the financial crisis. And then we just got momentum. Each time we went out, We knew what we needed to do. We asked for a certain amount of money. We did what we said we were going to do. And then we went back to the angels and said, here is what we did. And now we're raising money to get to the next level. And then we did that. And so we just had every round that we did was oversubscribed with interested parties.
It's phenomenal. And, you could write a book for other startup CEOs on how to raise capital, but you also, that's a lot of people to answer to. You work 7 days a week?
No, I've got very good work-life balance. I made that mistake early on in my career. With that many shareholders, you have to be proactive. You can't wait for them to come to you, because then you're going to be on the phone all the time. So we're proactively communicating.
Excellent.
And we have quarterly briefs that go out. We have quarterly shareholder calls. And then the shareholders get to know that I just have to wait till the end of the quarter, and then I will get an update on what's going on. But then also my shareholders got to know me. I know out of the 382, I think in a lineup I can pull about 300 of them by name.
Right.
I know them well, because over the years I value my shareholders. They put their hard-earned capital into my company, and I owe them a return, and they deserve to know what's going on in the company. So I've established a very good relationship. You know that, and most of my shareholders know that I take time out to talk to them.
Early on, and I'm fortunate to have made 53 investments at Keiretsu over the last 17 years, and I think I have 38 active right now. And when I see them communicate early, great dashboard technology, and they're being transparent, and they're telling you when they're going to communicate next, like say quarterly, then I will then back off. But conversely, if in fact they're not communicating at all or poorly, that is when the antennas come up, and then that's when you need an interface more with CEO. So congratulations. You should write a book on how to communicate, because you're living the dream right now, because you're working hard. I commented this morning, how fit you look, and so it's great to have life balance, which you have, right?
Right.
I guess you do, right? Or are you just working the whole time?
Going through the reverse takeover that we are, and in fact we've bought 2 public companies within 6 months of each other, and as we've got a small team, and so last year, middle of the year, we haven't even spoken about this yet, we bought another public company. This is why you were talking about Oslo. This was a public company listed on the Oslo Stock Exchange. We took them private, and we acquired them, and that was to add the second product to our pipeline. That's the MolGrid X product. And then 6 months later, we announced the merger with Moss Therapeutics. They're a New York listed public company. So that's a lot of work. Acquiring public company, there's a lot involved. There's a lot of documentation, integration of teams, and these types of things. So it has been an unusually busy year. It's been an unusually busy year.
What happens once you have the gravitas to be a public company? Is other capital sources going to come in? Then corporate strategics are going to come in for your future growth? What happens next after you have everything ratified and approved by shareholders? Let's fast forwarding a year from now, if you need more capital for grow and acquisition, where is the capital coming from?
Well, from here on out, it won't come from Keiretsu. Hopefully, your members will still be, holders of shares in Savara, and I know that many of them have told me that they trust the company and the team, and they believe that there's still a lot of potential ahead. So. But now it's going to be public investors, and those come in all shapes and sizes. They could be just regular folks on the street that like the company and the products. It could be institutional investors, healthcare investors. There's a wide range of potential investors in the company at that point.
See, everybody always says, well, let's move to a public shell, or let's move to an IPO. Watch out for your wish for it. You know the stresses that you handle stress very well, but do you know about some of the issues that could occur a year from now?
Well, no, I don't know everything.
Right.
Part of being an entrepreneur is blindly going into things that, and you solve problems. Right. And I've always said this, that a real entrepreneur isn't one that has a great idea. It's that every day you're creative in the solutions that are in front of you, right? It's multiple wins along the way that gets you to success. It's not just one big win at the end. It's creative thinking all the way along the way. So I don't know what the stresses are going to be, but I feel the obligation to my shareholders to get them to a point where they can get a return, and I'll continue to feel that obligation. And as long as the board keeps me as CEO, I will stay. And then at some point, the board may choose to pick someone else that has more experience in being a public CEO. and then my hat off to him, and I'll gladly move on to my next thing.
So the earlier show, which we taped with Jim Lucier, a Keiretsu Forum member, he is out on numerous boards, and we're talking about board governance and board activity. It seems to me early on that you really did a great job navigating and bringing the right board members on. Has your board stayed together last several years, or have you made any changes?
We have a fantastic board, and we have exceptional respect for each other. We solve difficult problems effectively together. My key board members have been with me since 2008. I think the most recent ones, I haven't changed board members for 3 years or so. So we've now, as a public company, we'll move from a 5-person board, which will be all of my current board members. We add 2 more board members from Mast Therapeutics, and so we'll become a 7-member board. So there's always a storming, forming, norming. New people on the board. We're going to have to figure each other out.
Storming,
forming, norming. It's a standard. I forget where I actually read that. But
South Africa?
No. It's a sort of team dynamics. You've got a team that's normalized and you're functioning well together, and then you make a change to the team. There's a storming process where it's you're figuring things out. Then you start forming the new dynamic, and then you get to a state of normalcy again, and then repeat.
So this show is about creative exit strategies, and we're speaking about one right now. What other strategies did you look at 2 or 3 years ago that you can share with the viewers that didn't pan out and or were interesting, but this was the right path for you?
So we went through them earlier. The one is an acquisition, and we were not out there trying to sell the company, because you can't sell a company. It's the worst exit you could have. If you try and sell your company, you're not going to get the value, and also it's not within your control, as I said.
So the bankers that you engaged, did they come on a retainer? Did they come on success? Because it can be very expensive.
Bankers for what? For the
exit. That you must engage bankers to look at possibly exit.
So we did engage a banker to help with identifying reverse merger candidates, and then help us in the process of screening those and then submitting our letters of intent. So we did hire a banker, but these are typically contingency based. So upon success, then we will pay you.
And so that worked out fine as a shareholder, because we weren't out of a lot of capital to engage them because they didn't succeed.
Right, we didn't pay a retainer based. Yeah,
okay.
So this was success based.
Okay. And so what resources did you get from your shareholders, if any? Because we certainly delivered you a lot of investors. I mean, when I turned around in Istanbul, there's Rob Neville. When I turned around in Toronto, you were there. It just happened as we travel the world. I'm going to be next Monday in Stockholm, and then I'll be in Prague chapters. Are you going to be there too?
No, I was in Copenhagen last week, though.
You're joking.
Seriously, I was in Copenhagen because now we bought a Danish company that was listed on the Oslo Stock Norwegian Stock Exchange, and so we now have a subsidiary of Savara in Denmark. These are fantastic people, and they're the ones moving the Molgradex program forward, the clinical development team. So I was just there last week, and I will be there again because we now have a subsidiary there. Yeah. So let me answer your question, though. Yeah. What are the shareholders bringing? As a private company, it's been very interesting because the shareholders we have, these are very successful, wealthy, smart people, and they have a lot to offer. And that was the trick, is how do you engage them? And as we've grown as a company, there's been times where I've needed certain expertise, and I've got a database of 382 folks that I can go to and say, oh yeah, we've got 4 or 5 patent attorneys that are investors. Let me get their opinion on this.
Nice.
In addition, so I have done the best I can. It's difficult with that number to really fully engage all the shareholders, but certain individuals have stood out as people that can bring real value. Some of them are bankers, and so I get their perspective on, which banker out of these few would you... So I have been able to leverage the skills of our investors at times.
So we met you through our Mid-Atlantic team. They found you in Austin. This show is in Northern California, Silicon Valley. That's where our chapters are. So you have obviously all these relationships around the globe, 380 plus partners. So these people that emerge as resource helpers, is that because you get to know all your shareholders, or do they pick up the phone and call you, or how do you navigate that?
You know, I have a database, and as I was learning about who did what, I've got notes next to each shareholder to say what his background was. So that's part of it. But then you get busy, you've got, and shareholders are outside of the company, so they really don't know what's going on. But then you send out a shareholder brief talking about here's where we are, here's what's going on. You know, we're acquiring a company in Denmark. And then I'll get, and I send it out to our 380 shareholders, and then I'll get a few emails back saying, oh yeah, I worked in Denmark. Are you aware of for instance, the Danish tax credits? And so you'll hear back from shareholders that have, because they all want us to succeed and they want to give their input. So that's one way, is just an active shareholder base. And I've prided myself in trying to keep my shareholders active. When we have shareholder consents, and these happen often, you know, when you send out a consent, by the way, you need to sign your consent coming up. The proxy that I have on file doesn't work for this case. You actually have to go to DocuSign. Okay, so you're going to get it tomorrow, and you need to go in there and click.
I promise I will sign it. Speaking of resources.
And that's on camera, right?
That's right. But speaking of resources, I will be in the Nordics in our chapter over there this next week. What can I do to help? What can I carry your flag and tell them all the good tidings of what you're doing? Obviously,
sure.
So hopefully this evening, type up some things I need to do when I'm over there, because angel investors, whatever angel group you belong to, or you belong to Keiretsu Forum, help your companies get the next step on exit. Help them with great resources, and most of the time they do listen, but they're all also busy. So it's busy next couple of weeks for you. Then where are you going to be?
You know, wherever the bankers tell me to go. But at this point, I'm visiting my shareholders, as you know, and trying to just get them to understand the rationale for this particular approach, and getting them to understand the consent that they're going to be getting, and explaining all the details. For instance, our shareholders have warrants. Well, what does that mean? How do I exercise my warrants as the company now goes public? So I've been just making sure that everybody is aware, such that we can have an orderly transition as a private company into a public company, and get the votes necessary to make that happen.
Good. So locally, you have 50 Keiretsu Forum members
in the Bay Area.
In the Bay Area, and so you're doing the road show. And today you were in the East Bay. Tomorrow you'll be in Silicon Valley. Also, Keiretsu Forum has a top-off fund called Keiretsu Capital. So we have to sign 2, don't we?
That's correct. You'll get another one. That's right.
Yeah. So FAQ on what have been the frequently asked questions to you the last couple of days from your shareholders?
That's an interesting. Some of the shareholders have been wanting to invest further money into Savara just ahead of the IPO. So I've been trying to explain there is a way to do that. So that's part of the discussion. Others just want to understand how many shares they have, and how many public shares does that translate into, and when can they sell their shares, and how does the process of taking a private company's stock certificate and handing that into the transfer agent, and then it appearing in your E-Trade or wherever, and then being able to trade it. How does that process happen? So I've just been trying to help shareholders transition through that, such that it's as painless as possible for them.
Oh boy, that's a lot of. So you're addressing a lot of questions. Well, myself personally, you know, I believe in you, so I want to hold. So holding is obviously through DocuSign, sign the consent, which I agree to, obviously, and then just doing nothing, correct? And
well, you still have to take your stock certificates and hand them in to the transfer agent, and then they will deliver back through your broker. Then you can choose to hold, or you can choose to sell once your lockup is over. So that's really it.
So fast forwarding a year from now, what is Rob Neville going to be doing with board approval? Where are you taking this great company?
We want to be a major company. We want to be, you know, there's some great companies out there that do respiratory. We want to have a niche area of having rare lung diseases products, a number of products, ultimately ones that are selling, and that we have a sales force in the rare lung disease space. And there's a number of areas, especially orphan areas. So these are smaller than 200,000 patients. You know, finding products that address unmet needs within the orphan area, and there's plenty of opportunities. Aerovanc is one, and that's for cystic fibrosis for patients with a MRSA infection. The other product is for patients that have an excess of surfactant in their lungs, where they have an autoimmune response and the surfactant builds up in their lung, and this solves that problem. And so we're doing good things in areas of unmet need.
Well, that later example, I mean, that's fantastic. I mean, you know, person will feel 20 years old if she has this in their lungs when they're 60 years old. So how does that work? Is that inhaler?
They're both inhaled products. That's right.
And so you'll hopefully the holy grail of cleaning out their lungs. Tell us how that works.
Okay, so it depends on which product we're talking about. In the case of Aerovanc, these patients have a MRSA infection, and that causes a pneumonia, and these pneumonias cause damage to their lungs and ultimately their death. And so when they're born with cystic fibrosis, their average lifespan is 37 years old. And so over time, their lung function decreases to the point that they either get a lung transplant or they die. And what we're able to do is deliver an antibiotic in the lung to suppress this particular pathogen called MRSA and prevent MRSA causing further damage to their lung. And so that's a good thing. You know, I enjoy what we're doing. In this other product, Molgradex, it's a different disease. In this disease, their lungs fill up with surfactant. It's an autoimmune problem. And by inhaling this particular product, it's called GM-CSF, is the protein. It solves that problem, and the recycling of surfactant happens in their lungs, and then the surfactant gets reduced, and they're able to breathe again. So, two great products, and we hope to bring on.
They feel fantastic, don't
and they feel fantastic after that. Yeah,
isn't that great? But you have to keep doing it, don't you?
In this particular, both cases, actually, you've got to keep doing it, but it's a whole lot better than the alternative.
Isn't that great? Well, again, getting back to, I'm a happy investor, but I love social bottom lines. So you're obviously making great impact around the world. So where is most of your products going to be sold? Are we talking Africa? We're talking United States? We're all over the world.
Well, it depends on the disease. In the case of Aerovanc, MRSA is mostly a problem in the US, although it is emerging in Europe and Japan and other places. So we'll be selling that all over the world. And then Molgradex, this is for PAP. PAP is a problem in Japan and Europe and all around the world as well. And so we'll be selling that all around the world.
Wonderful.
So, yeah.
Well, we're rooting for you, and we're really out of time. But if you want to see more about Rob, we have filmed you before, and it only gets better. And hopefully we'll have you a show a year from now, because you'll have acquired probably half dozen companies. But I said it, not you. But this is Keiretsu Forum Presents. So look on YouTube. You like to see other shows. Thank you so much, viewers, for your time the last 30 minutes. And Rob, thank you. And we'll see you tomorrow, Keiretsu Forum in Silicon Valley.
Perfect. Thank you.
Thank you.
Bye.